What's up, this is Ryan with Planet Cheapskate. In this video, we're going to be going through all the details when it comes to qualifying for a conventional home loan. What's the credit score required, debt to income, loan to value, what is the loan limit, and last but not least, all the particulars you need to be aware of when applying for this type of a mortgage. And also, be sure to stick around for 3 loan hacks that will get you into a conventional loan, all the while setting you up to save the most possible, potentially saving your deal, and finally actually getting you your deal on the home you love. But first, I'd just like to take a very brief moment to personally invite you to subscribe and join our community. I do a home loan rate update every Friday going into the weekend, along with a new video every Thursday helping you manage through the world of credit, investing, real estate, and home loans. Also, when you do subscribe, be sure to hit that little bell and it will alert you whenever I release fresh content. Now, with all that out of the way, let's jump right into this. So you're trying to decide which loan you should get. And if you're unsure, try checking out my super quick video here that breaks down each of the 4 main loan types in under 2 minutes. But if you've already decided that conventional is the loan for you, then you are in the right spot. A conventional loan is a great option for someone who has a great credit score, steady employment in a particular industry, and not too much debt. In fact, many scenarios, a conventional loan is going to be the optimum financial loan product for you long and short term. First, it allows lower down payment than the FHA, typically lower mortgage insurance with no upfront premium, which will make your closing cost and your loan amount less. And finally, the best part is your mortgage insurance can be removed once you get to at least 20% equity in the home. What I would say is maybe the worst part of a conventional loan is the lower debt to income allowance, which is why sometimes my borrowers, even with better credit scores, are forced to go the FHA route. But if I can get them into a conventional, you can bet your bottom dollar I'm going to go that route. One other thing that does kind of suck a bit less, but still a hassle to explain, is the fact that conventional mortgage rates are always a little higher than the government loans. And this is just because the government loans have a slightly higher level of protection by way of Uncle Sam protecting the lender from the risk. However, this hardly ever equals a lower monthly payment or loan amount than the conventional product due to the savings on the mortgage insurance and the loan amount being less. This can be one of the hardest things to explain to a borrower who has heard their whole life, you should always go for the lowest rate. And I agree, get the lowest rate, but also factor in the mortgage insurance into the numbers as well. During the course of this video, we will cover each of these areas and many more details on the conventional home loan. And by the end of this video, you will know exactly what you need to qualify for a conventional home loan. And after checking out my 3 conventional loan hacks, you will be an absolute wizard when it comes to this loan. So when it comes to a conventional home loan, you may qualify with a credit score down to 620 with most lenders. But the unfortunate thing about qualifying this low is most lenders are going to give you a higher interest rate and higher mortgage insurance, as both of those are highly reactive to your credit score. So there are 2 ways you can qualify to put only 3% down on a conventional loan. The first way is to be a first-time home buyer. The second way is to make under 80% of the minimum annual income in the area of the subject property. Now, the 3% option can only be used once as a first-time home buyer, and the 80% option may only be used if you do not have any other outstanding home loans. So a bonus hack for you is if you do not qualify on the 80% and have already used your first-time home buyer option, if you find someone who hasn't used the option previously to be a co-borrower, even if it's as a non-occupying co-borrower, then you can qualify for the 3% again. It seems like it would be kind of a big hassle to go through for potentially 0.5%, but it is an option for you. Conventional home loans also have some of the least tolerant debt-to-income ratios allowed of any of the major home loans. Debt-to-income is just a ratio we use to determine the percentage of your income versus your monthly debt obligations. This gives the lender a good idea if you have enough income to make your payment plus keep up with your other bills. So for conventional loans, there is no front-end limit, but the back-end debt-to-income ratio, which takes into account all your debts and your proposed housing payment, cannot exceed 49.99%. However, many lenders will not lend more than 43% on your debt to income ratio as an additional overlay on the conventional loan. So loan to value on a conventional home loan can go all the way up to 97% as long as you jump through all the hoops to qualify for that. Otherwise, you'll be required to put no less than 5% down with an LTV of 95%, meaning you'll be financing 95% of the value of the home, you'll bring 5%, and the lender is going to bring 95%. Now I know I got some Minecraft millionaires out there watching my videos, but don't go using all your esports winnings putting a down payment on that $1 million home just yet. Conventional, much like FHA and USDA, has loan limits. Like the other loans, they are also changing every year, and given the current Kenyan type hyperinflation going on with our dollar right now, I'm sure this number will be rising every single year. But currently the conventional loan limit is $548,250. I'll leave a link in the comments below where you can look up the current limits based on what year you're watching this video. So for a conventional loan, you will need 2 years job history, not necessarily with the same employer, but within the same industry. The only exception to this rule, much like FHA, is if you were in college going to school and received a degree towards your eventual career. In that case, you would only need to provide your transcripts, college certificate, and an offer letter from an employer. If there were any gaps in employment, you will need to have an offer letter, and the employment still needs to be in the same industry that you were previously in. When it comes to the minimum investment required on a conventional loan, you'll need to provide at least the down payment amount from your loan from verified sources. Again, there are down payment assistance programs, but they are trash. Look into seller or lender credit instead. They aren't the greatest either, but they don't lock you into any negative features like the DPAs do. The best way to handle your down payment minimum investment is by way of saving, receiving gift funds from a family member, or a loan from your 401k or IRA. You cannot, however, get any sort of unsecured loan or credit card to pay for your down payment. And one final caveat to clear up on this subject is you are restricted to only receive up to 3% of the purchase price in seller credit. This percentage progressively raises as you put more money down, but just be aware you are a little restricted on your seller credit with a conventional loan. So finishing up the conventional details to be aware of, you may use this loan for a primary, secondary, and investment property with anywhere from 1 to 4 units. And if you do finance as a secondary home, you'll be required to put 10% down. With an investment property, you're going to be required to put at least 20% down, with many lenders requiring 25% depending on your credit score. Conventional loans usually have easier appraisals with less issues coming up. Usually if it's not safety based or structural based, then it will not create an issue with the appraisal. Conventional loans aren't the most lenient when it comes to allowances and forgiveness of credit issues. So if you have collections, medical bills, student loans, bankruptcies, foreclosure, and stuff like that, then the conventional is not going to be your best bet. For medical collections, they do not count against you as long as they are under $2,000. Most all your collections are going to have to either have payment arrangements set up, or you're going to have to settle and pay them off before you can proceed with the conventional loan. Now, if you've had a bankruptcy outside of a Chapter 13, you will need to wait 4 years until after the dismissal. For a Chapter 13 bankruptcy, you're going to need to wait 2 years after the dismissal and have established a positive credit profile. Applying with a foreclosure, you're going to have to wait 7 years. A deed in lieu of foreclosure or a short sale, you're going to need to wait 4 years after the incident was reported on your credit report. If you have student loans deferred or in forbearance, they will count against your debt to income for as little as 0.5% of the total balance, and income-based repayment plans may be used to determine the monthly payment. So as promised, 3 loan hacks that will save you money, save your deal, or actually help you get the home you want. So for the first hack, this is something you need to do maybe right before you're closing when your lender calls to tell you that you're clear to close. When they reach out and tell you the good news, thank them and then ask them to print off what is called an amortization schedule for your loan. Then ask them to guide you through reading it and finding the date where you will have 20% in equity or 80% loan to value. Once you found this date, put it in your calendar, put it in your phone, put it in your computer, and any other device or calendar you can find. The reason this is such an important date is because your mortgage insurance does not automatically drop off once you get to this date and you're at 80% loan to value. You will have to call and request it. Your mortgage insurance drops off at 78% loan to value, and you better believe the lender will not be dropping it off voluntarily at 80% unless you are calling them. The second loan hack involves certain situations where your conventional appraisal has come back under value. On a conventional loan, and this is the only loan you can do this on, but you can get a second opinion on the value of the home. The only important detail is you'll have to switch lenders, so this option works best if you're working with a broker. And finally, my last hack It really isn't based on a conventional loan, but more of those particular occasions that it just makes more sense for you to go FHA. And when this happens and you can still qualify for a conventional loan, have your loan officer issue you 2 pre-approvals, one for FHA and one for conventional. Have your realtor explain to the listing agent that you want to provide both to show that you are a strong borrower who could qualify either way, but it just makes more financial sense for you to go FHA. This has worked for many of my borrowers to win the contract, even over conventional borrowers sometimes. So try it out and see if you can get it to work for you. So there you have it, everything you need to know about the conventional home loan, along with 3 loan hacks that will save you cash, save your deal, and potentially get you the home that you love. Please leave a comment below if I missed anything or you have a question. I'd love to hear from you. And listen, if you gained value or knowledge from this video, do me a huge favor and smash that like button so more people just like you can see this info. And if you like this video, I'd like to invite you to watch one of my other videos. Over here, I walk you through the complete home buying process step by step. And over here, YouTube has determined that you may enjoy this video. Thank you for tuning in. Until next time, best of luck.